Alright guys, so I know what you're thinking. Sean is talking about the end of the world again, and you're absolutely right. So we must talk about the dollar today and how weaponizing it is a really bad idea. An economic tsunami is about to hit the world. The dollar isn't just a currency anymore, it's becoming a financial weapon of mass destruction. And the world, especially the global south, is beginning to resent this. In a recent interview with Bloomberg, Trump has confirmed the unthinkable. There's a very good chance he will become president, and if that happens, he might just unleash hell on countries looking to de-dollarize.
If a country tells me, sir, we like you very much, but we're going to no longer adhere to being in the reserve currency, we're not going to salute the dollar anymore, I'll say that's okay. And you're going to pay a 100% tariff on everything you sell into the United States. And we love your product. I hope you sell a lot of it into the United States, but you're going to pay 100% tariff. He will then follow it up by saying, sir, it would be an honor to stay with the reserve currency. That will be like just playing. That's not even chess, that's checkers. But you don't have listen to this, you don't have other people that can talk that way.
So if a country moves away from the dollar in global trade, Trump will slap a 100% tariff. He knows the USD is in deep trouble, but this isn't the way to protect dollar hegemony. We are moving towards a multipolar world, and what Trump is doing will only accelerate de-dollarization. He will start a global trade war that will send inflation in the US to the moon. Now we know Trump loves his tariffs, and that is his solution to every single problem facing the US economy. The classic hammer and nail analogy. In order to reshore US manufacturing, he's going to impose taxes on companies to prevent outsourcing.
The tariff, you make it so high, so horrible, so obnoxious that they'll come right away. When I do the 10%, 10% is really, first of all, 10% when you collect it is hundreds of billions of dollars. The numbers that you're talking about, all reducing our deficit. But really, so there's two ways of looking at a tariff. You can do it as a money-making instrument, or you can do it as something to get the companies. Now, if you want the companies to come in, the tariff has to be a lot higher than 10%, because 10% is not enough. Guys, they're not going to do it for 10. But you make a 50% tariff, they're going to come in.
Now, I find Trump very entertaining, but some of his policies are downright bizarre. Yes, you could force companies to manufacture in the US, but prices will go up and consumption could collapse, especially if it's a 50% tariff. So understand the setup coming in the United States, which will spill over to the world economy. Almost immediately, the US dollar started to rise. If Trump is going to clobber the world with tariffs, this would slow down exports to the US, which means the USD would ironically strengthen. The US will export fewer dollars. The implications are extremely scary. Trump, he wants a weaker currency to increase exports and boost economic growth. But if tariffs are here to stay, he has only one method left to save US manufacturing, which is to ramp up deficit spending. And let's look at things objectively. According to the CRFB, Trump contributed more to the national debt than even Joe Biden. We have the tax cuts and the CARES Act that exploded debt, and that will add over $8 trillion in 10 years. It's almost double the debt added by Joe Biden during his current term. The US deficit currently stands at 6% of US GDP, but it's probably going to rise even further. Now, we need to be clear here. Both Harris and Trump, they're horrible for the US economy, especially the national debt. Kamala will extend the Ukraine war and impose price controls, while Trump, he wants a reshoring plan full of tariffs and tax cuts. And here's the economic disaster. On average, Kamala Harris would increase the national debt by $3.5 trillion over the next 10 years. On the high end, it would be $8.1 trillion. But Trump's policies would double the pain, an average of $7.5 trillion and over $15 trillion on the higher end. This is the real tragedy of the US dollar. The currency is going to get debased even further, which will pull the world down as well. So if you hold US Treasury bonds, you might be getting a 3 or 4% yield. But the dollars you get back at the end of the day will purchase less, Make no mistake, the real return might be zero or even negative. Trump weaponizing the dollar only makes things worse. His punishments could even extend to countries dumping US bonds. There's a clear reason why gold is trying to break $2,700. That's a 30% rise over the past 12 months. It's really a reflection of how crazy things are in this world. No matter who wins, the US deficit will increase. But if Trump gets in, which I believe he would, the dollar will be used as a stick to clobber countries. And this is going to have the exact opposite effect. Even before the Trump interview, central banks around the world, they are saying they need to buy more gold. We have reserve managers from Mexico, Mongolia, and the Czech Republic all singing the same tune. We will increase our holdings of physical gold bullion. This isn't China or Russia saying this, they have been buying gold since forever. It's countries in the global south and North America saying they don't trust dollar assets anymore. According to Mexico, lower rates, political tensions, US election, and a lot of uncertainty, the share of gold in our portfolios could be increasing as well. We can expect the world to continue diversifying more into gold as a hedge. And if Trump hammers countries looking to de-dollarize, the US might one day tax the earnings of US treasuries as a form of punishment as well. It's not impossible, and if I can think of it, I'm sure the powers that be, they have this strategy tucked away somewhere in a very, very dark corner. But let's look at the trend here. Treasury holdings in the world have been staying flat for over 10 years. While the G7 is buying more US bonds, countries like China, they are dumping their holdings. Since 2019, the world's holdings of gold have gone ballistic. It's heading higher and higher. This trend will only continue, especially with Trump's de-dollarization threat. Banks will swap out US bonds for gold. It's already happening in front of our eyes. Now we know US sanctions won't work, from the oil price cap on Russia to slapping Chinese EVs with a 100% tariff. This will all backfire, and now we have evidence of this. G7 chipmakers are starting to collapse. Their bottom lines are dropping like flies because they listen too much to the United States. This is the stock price of ASML, the crown jewel of the Netherlands. Since June, their stock price have been collapsing. From a peak of €1,000, it has crashed down to nearly 600. Since Tuesday, the stock has wiped out $60 billion in market value. The company missed their sales estimates by over 50%. And it's not just the Dutch chip maker. Japan's Tokyo Electron stock collapsed by nearly 10% as well during trading hours. The same fear is spreading throughout the G7. Because of US sanctions, we can't sell our chip makers and machines to China. The US is also not compensating us for this loss, so our earnings are going to collapse. And more bad news is coming for G7 chip makers. Biden is tightening his sanctions on Chinese semiconductors. He wants to restrict China from making AI chips. As a result, revenues for ASML could be collapsing even more in 2025. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to investing in gold and silver, I trust Indigo Precious Metals in Singapore. They have made buying precious metals safe, fast, and easy for investors, whether you're making small purchases or large scale investments. With gold prices steadily rising, ensuring you buy authentic gold at competitive prices is crucial. And as inflation shows no sign of slowing down, precious metals continue to be a reliable store of value. Whether you're purchasing by the ounce, the kilo, or saving up by the gram, Indigo Precious Metals helps you maximize your investment no matter your budget. The best part, you can test your coins or bars on site, giving you complete peace of mind. As a leading retailer and bullion dealer in Singapore for gold, silver, and platinum, they are your go to source. If you're considering your first gold, silver, or platinum purchase, there's no better place to begin than Indigo Precious Metals. For this month only, you can get a 100-ounce silver bar at less than 3% premium. Stocks are limited. So if you're looking to buy silver, this is a great promotion to really consider. And with my code Sean Fu, enjoy a further discount on your first purchase. So start building your gold and silver stack today. In Q3 this year, China accounted for €2.8 billion of sales for the company. and that's around 50% of global revenue. However, in 2025, the company expects China to only account for 20% of total revenue. Restrictions on ASML are going to ramp up and they can sell fewer machines to China. The US wants to turn ASML and Tokyo Electron into their own personal supplier of chip makers as subsidiaries of the US manufacturing industrial complex. However, it doesn't even make economic sense. The demand from the US and Western countries just isn't enough. Firstly, China has been ramping up imports of chip making gear. Since October, they have averaged at least $4 billion a month. If we take away the chip sanctions, ASML and Tokyo Electron's revenue from China could easily double, maybe even triple. But because they listen to the US and their sanctions, this income stream is starting to die off. China accounts for over 50% of global semiconductor consumption, which means the country really needs a ton of chip makers. It's quite incredulous that these giants they just refuse to see the truth or they are so terrified of the US. Between 2023 to 2027, China will be building over 40 new chip plants in the world. That's more than any other region. It's even 4 times that of Taiwan, and these are just in legacy chip plants. So the potential for new plants to build AI chips is there. If ASML ignores the US, Beijing can ramp up production and demand for lithography machines would shoot through the roof. Sanctions always backfire, and we are seeing this manifest in semiconductors. But the next domino to fall will be the EV sector. In the next 12 months, we'll see G7 EV sectors just regress even further, especially brands in the EU. But let's circle back to the threat of dollar weaponization because Trump's statement is really scary. There's also another implicit threat lying underneath. Ditching the dollar as a reserve currency could also mean countries that dump their treasuries. And this threat won't make countries buy more US bonds, it's exact opposite. It will trigger the reverse effect. This means a new breed of US debt buyers is coming, and that is bad for the US economy. Foreign central banks are becoming the minority buyers of US bonds. In January this year, they held $3.4 trillion, and that's only 14% of outstanding bonds. Remember, this was before China and Japan started dumping even more treasuries. Whereas in 2019, it was 25%, and in 2008, holdings were 40%. And this shows a very disturbing trend that even without Trump's threats, central banks are exiting the US bond market. But obviously, there are still some buyers for US bonds. The market hasn't collapsed yet. A new breed of treasury buyers is here. Instead of central banks, we have hedge funds, mutual funds, and retail investors piling into US bonds. And this has very big consequences for the economy, especially the national debt. This new buyer base will demand a heavy premium to finance Washington's spendthrift ways. No matter who gets into office, the deficit is going to fly up. Trump or Harris, they will both explode the national debt. And to fund either Ukraine or reshore US manufacturing, the US Treasury will have to issue a tsunami of bonds. You can count on this. But they can no longer issue them at lower yields. All of this funding will come with a premium built into it. This would compound the debt burden even further and push the US closer and closer towards a default. So, who are the big buyers of US bonds today? The biggest buyer, Japan, has been flat all year round, while China has reduced holdings by over $50 billion. The new whales are from the UK, Luxembourg, and the Cayman Islands. Now, the UK is a financial hub. A lot of investors go to the city of London to place trades. Luxembourg and the Cayman Islands both are tax havens and they bought over 130 billion last year. These aren't central banks buying. These are your hedge funds, family offices, and mutual funds. Here's the problem. Unlike central banks that can sit on bonds until they mature, these investors can't. If their customers want to cash out, the funds will have to dump their holdings. This will spike yields up and force US interest payments to snowball even further. We are at $1 trillion a year just on the interest payments alone, and it's going to get much worse down the line. And let's make things very simple. The debt crisis is getting out of control, and it is a very urgent issue. The US national debt today is over $35 trillion, a combination of Biden and Harris. they have added nearly $12 trillion in just 4 years. We had stimulus checks in 2020, money spent to contain China, and over $100 billion given to Ukraine. And this is why asset prices, they're just flying up. There's just too much money in the system. And if we divide the national debt across every single American, it's over $100,000 per person. And that's a crazy amount that can't be paid back. Sooner or later, a default will happen. This is not just a Trump issue because if Kamala Harris somehow wins, she might be even worse. She's not backing down from her price controls and it will blow up the US deficit.
Those few companies that would take advantage of the desperation of people and jack up prices. Yeah, I'm going to go after them. Yes, I'm going to go after them. And that is part of a much more comprehensive plan on what we can do to bring down the cost of living, including housing, including the everyday needs of the American people.
So hang on tight, guys. No matter who wins in November, everyone loses. The only number going up is the national debt. But let me know what you think. Will Trump punish countries trying to de-dollarize? And can the US ever get the national debt under control? Or is it all a pipe dream? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.